Imagine for a moment that the entire financial world is a vast, dark ocean. For centuries, we've been sailing on the surface, guided only by the stars and the occasional lighthouse, completely unaware of the immense, hidden currents flowing deep beneath our ships. We make bets on the weather, on the wind, but we are blind to the true, powerful forces that actually dictate where we will end up. Now, for the first time in human history, we have a technology that illuminates those depths. We have a sonar that maps out these hidden currents in real time, revealing the movements of the leviathans, the shifting of the tectonic plates of value itself. That sonar is Bitcoin's on-chain data, and what we're seeing right now on those scanners is not just a squall or a bit of choppy water. We are witnessing the formation of a financial hurricane that will redefine the next decade. This isn't just another price prediction video. This is a deep-sea dive into the very heart of the Bitcoin network, using data that never lies, to show you exactly what the most powerful players in the world are doing with their money right now. Actions that are completely contrary to the fear and uncertainty you see on the news. What you are about to see will change how you see markets forever. So listen closely, and by the end of this, you will understand why the next 6 months could be the most important of your financial life. To truly grasp the seismic shift happening beneath our feet, we must first abandon everything we think we know about market analysis. Traditional finance is a world of smoke and mirrors, of earnings reports that can be massaged and economic indicators that are lagging, often telling you what happened months ago, not what is happening now. The stock market is a narrative, a story told by talking heads who are often miles removed from the actual flow of capital. But Bitcoin is different. Bitcoin is a global, distributed, and utterly transparent ledger. Every single transaction is recorded, verified, and set in digital stone for anyone with an internet connection to see. This isn't a story, it's a data set. And within that data set lies the ultimate truth of market sentiment, investor behavior, and capital flow. The key insight from CryptoQuant's key young Jew, which we will be dissecting for the next 30 minutes, revolves around one central explosive concept: the behavior of the long-term holders. These are not your day trading, panic-selling speculators. These are the whales, the institutions, the OGs who have weathered every storm from MT Gox to the crypto winter of 2022. They are the bedrock of the Bitcoin ecosystem. And on-chain data provides us with an unfiltered, real-time window into their collective psyche. Right now, that data is screaming something that the mainstream media is utterly oblivious to. While headlines chatter about inflation, interest rates, and geopolitical turmoil, creating a facade of fear and uncertainty that is designed to make the average investor capitulate and sell their assets at a loss, the long-term holders are doing the exact opposite. They are not selling, they are accumulating. And they are not just accumulating a little bit. They are gobbling up Bitcoin at a pace that rivals some of the most aggressive accumulation phases in this asset's entire 14-year history. Think about the profound implication of that for a second. The entities with the most knowledge, the most skin in the game, the ones who have seen this movie before and have become billionaires because of it, are using this period of market fear and negative sentiment as a once-in-a-generation fire sale. They are not listening to the narrative. They are reading the data. They are looking at the same on-chain metrics we are about to explore, and they are voting with their wallets, with billions of dollars of cold, hard capital. This creates a fundamental and almost unbreakable floor under the price. It's a game of financial tug-of-war. On one side, you have the short-term, weak-handed sellers, driven by emotion and bad news, creating selling pressure. On the other side, you have these colossal, patient, and incredibly wealthy long-term holders who see that selling pressure is a discount and are creating immense buying pressure. For months now, this battle has been raging, and the on-chain data shows a clear and decisive winner. The long-term holder supply metric, which tracks the total amount of Bitcoin held in wallets that have not moved their coins for at least 155 days, has been on a steady, relentless climb. This is not a speculative metric. It is a factual record of coins being moved from active, speculative wallets into deep, cold storage. It is a digital equivalent of gold being transferred from a busy market stall and buried in a secret, underground vault, not to be seen again for years. This is the first and most critical pillar of our analysis. The bedrock investors, the smart money, are not just holding. They are in a state of aggressive, confident accumulation. They are sending a signal, not with their words, but with their immutable transactions on blockchain, a signal that anyone can see if they know where to look. This signal tells us that the foundational support for Bitcoin is stronger than it has ever been, and that the current market prices represent not a danger, but a historic opportunity for those who can see past the frightening headlines and understand the raw, unmanipulated truth of the data. This is the power of on-chain analysis. It allows you to see the reality of the market, not the fiction, and that is just the beginning. Because to understand the full picture, we need to look at the other side of this equation. The sellers. Who are they, and why does their behavior, when contrasted with the long-term holders, create such a powerful and predictable market dynamic? That is exactly what we're going to uncover in the next segment. And what I will reveal about the short-term holder cohort will shock you and completely reshape your understanding of where we are in this market cycle. But before we move on, I need you to do something for me right now. If you are getting value from this deep dive, if you're starting to see the immense power of looking beyond the headlines, then you need to smash that like button and subscribe to the channel. The algorithms need to know that this is the kind of high-quality, data-driven content you want to see. And by subscribing, you are ensuring you don't miss part 2, where we expose the single most important on-chain metric that has accurately predicted every major Bitcoin bottom in history. Now, let's pull back the curtain on the other critical side of this market equation, the sellers. Because to truly appreciate the monumental strength of the long-term holders, we must understand profound weakness and psychological state of those on the opposite end of these transactions. On-chain analytics gives us a crystal clear lens into this as well, categorizing this group as short-term holders, essentially any wallet that has held its coins for less than 155 days. These are the recent buyers, the momentum chasers, the emotionally driven participants who are most susceptible to the fear, uncertainty, and doubt, the FUD, that dominates the mainstream financial narrative. And what the data reveals about their behavior right now is not just a minor trend. It's a classic, textbook, and heartbreaking display of market cycle psychology playing out in real time. The short-term holder spent output profit ratio, or SOPR, is one of the most telling metrics we have. In simple terms, it tells us whether this cohort is, on average, selling their coins at a profit or at a loss. When the SPR dips below 1, it means the average short-term seller is realizing a loss. They are selling their Bitcoin for less than they paid for it. And for the better part of the last several months, this metric has been wallowing in the depths of negativity. This is the sound of capitulation. This is the quantifiable data point for panic. Every time there's a negative news headline, a scary macroeconomic report, or a sudden price dip, the short-term holder SPR plummets, indicating a fresh wave of investors throwing in the towel, crystallizing their losses, and transferring their cheap Bitcoin directly into the waiting, patient hands of the long-term holders we just discussed. This is the ultimate wealth transfer mechanism, and it's happening silent on the blockchain every single day, completely invisible to anyone who only watches CNBC or scrolls through fear-mongering tweets. These sellers aren't evil or foolish. They are simply human, operating with profound informational disadvantage. They are reacting to the surface-level narrative, the secondary effect, while the sophisticated players are acting on the primary data. They see a price drop and interpret it as a signal of further decline, a broken thesis, or a failing asset. What they don't see is that their very act of selling at a loss is, in fact, the fuel for the next explosive bull run. They are providing the liquidity and the cheap inventory that the market's bedrock absolutely requires to build a new, higher foundation. This dynamic creates what analysts call a capitulation floor. It's a painful but necessary phase in every single Bitcoin cycle where the weak hands are forcibly washed out, their coins redistributed to stronger hands, and the overall average cost basis of the network becomes healthier and more resilient. We are in the final, agonizing stages of that process right now. The data shows that the realized price for short-term holders, essentially the average price at which they bought their coins, has acted as a key resistance level, meaning every time the price tries to climb back up to their break-even point, they use the opportunity to sell and get out, creating a self-fulfilling prophecy of suppression. But this cannot last forever. There is a finite amount of Bitcoin that these panic sellers can offload, and with each passing day, the long-term holder accumulation absorbs more and more of that supply. This brings us to one of the most powerful and recently highlighted concepts from the on-chain world, the coin destruction metric. This isn't about coins being burned. It's about coins being effectively destroyed for the active, liquid market. When a long-term holder moves a coin from a hot wallet to a cold storage solution or a multi-signature vault, that coin isn't just held. It is essentially removed from the circulating supply for the foreseeable future. It is taken off the market. It is destroyed in terms of its immediate price impact. Think of the liquid, tradable supply of Bitcoin as a shrinking pool of water. Every day, the long-term holders are using giant buckets to remove water from this pool and pour it into a separate locked reservoir. The pool is getting shallower and shallower. Now, what happens when demand, even a modest amount of demand, returns to a market with a rapidly depleting supply? The laws of economics are immutable. The price must increase, and not just gradually, but violently and unexpectedly. This is the setup we are in. The short-term holders are providing a constant, fear-driven supply of coins, and the long-term holders are systematically, programmatically, and relentlessly vacuuming them up and locking them away in digital fortresses, dramatically reducing the float. The culmination of this is a supply shock, and the on-chain data is flashing warning signs that this shock is imminent. The percentage of the total Bitcoin supply that hasn't moved in over a year is hovering near all-time highs. This is an unprecedented level of illiquidity being created right before our eyes. The market is being primed like a coil, compressed by fear and opportunistic accumulation, storing an immense amount of potential energy. When the narrative finally shifts, when the first piece of unequivocally positive news hits, or when a major institution announces a massive purchase, the buyers will rush in only to find that there are simply not enough coins left at these prices to satisfy their demand. The sellers have been exhausted, and the available supply has been hoarded. The result is a vacuum, and nature, along with markets, abhors a vacuum. The price will have to surge to discover new, willing sellers, but those sellers are now the long-term holders, and their asking prices exponentially higher. This leads us to the most critical part of our discussion, the master key that ties all this data together, the cost basis of these two diametrically opposed groups. Understanding the precise price levels at which the long-term holders accumulated and the short-term holders are breaking even is the final piece of the puzzle, and it gives us a mathematical roadmap for the price action we can expect in the coming months. What we will uncover next is the single most accurate support level in the entire Bitcoin market, a level that has held strong through every bear market and has launched every bull market. It is the long-term holder support line, and its current position relative to price tells a story that every single investor needs to hear. But before we dive into that financial blueprint, I need you to do something. If this deep dive is opening your eyes to the reality of the market, if you're starting to see how the emotional crowd is being used as fuel for the next leg up, then you need to hit that subscribe button and ring the notification bell. What I'm about to show you in the next segment is the closest thing to a crystal ball in finance, and you do not want to miss it. This is where we move from observation to prediction. So we have our two opposing forces clearly defined. The steadfast, accumulating long-term holders building a fortress of support, and emotionally driven short-term holders providing a constant stream of discounted fuel in a state of panic capitulation. But to navigate the seas ahead, we need a chart. We need a specific numerical line in the sand that tells us, with a staggering degree of historical accuracy, where the absolute floor of this market truly lies. That line exists, and it is the most important number in Bitcoin right now. It's not the spot price on an exchange. It's the realized price for long-term holders. Let me explain this monumental concept, because this is the master key, the financial blueprint I promised. The realized price is a brilliant on-chain metric that calculates the average price at which every single Bitcoin in a specific cohort was last moved on-chain. For the long-term holder cohort, this gives us the average cost basis for the smartest, most committed, and most powerful entities in the entire ecosystem. It is the price at which they originally acquired their coins. This is fundamentally different from a market price, which is just the last traded price, a number swayed by sentiment and momentum. The long-term holder realized price is a measure of bedrock conviction. It represents the collective financial pain threshold for Bitcoin's most influential players. Throughout Bitcoin's entire history, this line has acted as an unbreakable support during bear markets. In every single major cycle, the market prices dip below this line only briefly, And those moments have consistently marked the absolute bottom, the point of maximum financial opportunity, the moment when the last weak hand capitulates and the strong hands can absorb no more. It is the final boss level of a bear market. Why is this line so powerful? Because it represents the point where the long-term holders, on average, are at a loss. These are not players who panic. When their entire portfolio slips into the red, they don't see it as a signal to sell. They see it as a signal to double down. Their conviction is not based on fleeting price movements, but on a deep, fundamental belief in Bitcoin's long-term value proposition. They have been through this before and emerged victorious on the other side, wealthier than they could have ever imagined. So, when the price touches or slightly wicks below the long-term holder realized price, it triggers the final, massive wave of accumulation. It's a buying signal of monumental proportions for the very entities that control the supply. Now, here is the critical data point that should make every single investor in this space sit up and pay attention. According to the latest on-chain analysis, including the insights from CryptoQuant's Ki-Young Ju, the current long-term holder realized price is sitting at a level significantly higher than in previous cycles, reflecting the higher prices at which these players have been accumulating throughout this entire period. But more importantly, the current market price has been dancing perilously close to this line for weeks. This is not a coincidence. This is the market mechanism performing its Darwinian duty, testing the final level of support. Each time the price dips near this level, the on-chain data shows a massive spike in coin movement from exchange wallets to cold storage, indicating that the long-term holders are not just holding the line. They are actively reinforcing it with billions of dollars of new capital. They are defending their cost basis with relentless buying. This creates a powerful magnetic effect on the price. It becomes exponentially more difficult for the market to fall significantly below this level because any dip is met with an avalanche of buy-side demand from the most well-capitalized participants. Think of it as a financial gravity well. The closer the price gets to the long-term holder realized price, the stronger the gravitational pull becomes, sucking the price back up as supply is vacuumed out of the market. We are currently in this gravity well. The panic selling from short-term holders is pushing the price down towards this line, and the systematic algorithmic level buying from long-term holders is creating a floor of such immense strength that it has never, ever failed in Bitcoin's history. This is the ultimate contrarian signal. The headlines are screaming danger. The short-term holders are selling in fear, but the cold, hard data of the blockchain is showing us that we are in the safest possible zone for long-term investment, the zone that has always, without exception, preceded a historic price appreciation. The narrative is fear, but the data is fact. And the fact is that we are trading at or very near the cost basis of Bitcoin's most formidable investors. This is not the time for uncertainty. This is a time for study conviction. This dynamic also gives us a clear and simple framework for risk management. A sustained break below the long-term holder realized price would be historically anomalous and would signal a fundamental breakdown in the Bitcoin thesis, something that has never occurred. Therefore, for any investor with a time horizon longer than a few months, any price action at or near this line represents not risk, but opportunity. It is the market offering you a chance to buy Bitcoin at the same price as its most committed holders, the entities who see the decade-long picture. You are being given a ticket to join the smart money, to have your coins custodied alongside the whales and the institutions. But most people are too blinded by the surface-level fear to see the gift that is being presented to them. This understanding of the support structure leads us to the final, and perhaps most exciting, part of our analysis, the catalyst. We've built the foundation, we've identified the floor, and we've seen the supply shock forming. But what is the spark that will ignite this tightly coiled spring? What specific event or shift will break the narrative of fear and unleash the pent-up demand onto a supply-constrained market? The answer lies in a convergence of on-chain triggers and real-world events that are already beginning to align, creating a perfect storm for a price discovery event that will shatter all previous expectations. The stage is set, the actors are in position, and the script for the next great bull run is already written in the immutable data of the blockchain, waiting for its cue to begin. What we will explore in our final segment are the specific, tangible catalysts that are lining up for the months ahead, catalysts that are so powerful they will inevitably overwhelm the current negative sentiment and force a dramatic and violent repricing of the entire asset class. This is where we go from defense to offense, from understanding the floor to projecting the ceiling. But before we make that final leap, I need you to internalize this. If this data-driven perspective is giving you a sense of clarity amidst the market chaos, it is making you realize that the greatest financial opportunities are born not from following the crowd, but from understanding the underlying truths that the crowd ignores, then you need to take action. Please like this video and subscribe to the channel with notifications on. The final piece of this puzzle is the most critical, and it details the exact sequence of events that could propel Bitcoin to heights that seem like fantasy today. You need to see this. The countdown has already begun. We have navigated the depths of the on-chain data, witnessing the silent, relentless accumulation by long-term holders against the backdrop of panic selling, and we have identified the unbreakable support line formed by their collective cost basis. The foundation is laid, the floor is set, and the supply shock is primed. But a coiled spring requires a release. A powder keg needs a spark. So now, we turn our attention to the catalyst, the specific, tangible, and increasingly probable events that will serve as the tipping point, breaking the narrative of fear and unleashing the pent-up thermodynamic pressure built up within Bitcoin's economic system. This isn't about vague hope. It's about tracing the lines of a pre-written script based on cyclical patterns, technological milestones, and macroeconomic inevitabilities that are converging right now. The first and most immediate catalyst is the final washing out of the short-term holder cohort. This is a psychological and data-driven event. As we've seen, their capitulation is a fuel, but there's a specific moment when this fuel is exhausted. On-chain analysts watch for a metric known as the entity-adjusted dormancy flow, which essentially signals when the market value of the coin day is destroyed, a measure of the selling of old coins, is overwhelmed by the new investment being added. We are approaching a multi-year high in this metric, a classic signature of final surrender. When this last wave of weak hands finally exits, their coins transferred permanently into cold storage, the selling pressure that has been suppressing the price will simply vanish. It will happen not with a bang, but with a whimper, and the market will suddenly find itself incredibly light, with no one left to sell. The second catalyst is the inherent pre-programmed supply shock built into Bitcoin's code, the halving. Sometime in the spring of next year, the block reward issued to miners will be cut in half, from 6.25 new Bitcoin per block to 3.125. This is not a speculative event. It is a certainty coded into the protocol by Satoshi Nakamoto himself. The impact of this cannot be overstated. It is a forced supply constriction. Regardless of price, sentiment, or global economics, the daily issuance of new Bitcoin will be slashed by 50%. Think back to our shrinking pool analogy. The halving is like turning off the main inlet pipe, feeding new water into the pool. Suddenly, the only supply available is the liquid coins held on exchanges, a pool that, as we've established, is being rapidly drained by long-term holder accumulation. The laws of scarcity are about to be applied with brutal, algorithmic efficiency. History has shown that the 6 to 12 months following a halving event have produced the most dramatic bull runs in Bitcoin's history, not because of the event itself, but because the supply shock it creates collides with a steady or increasing demand. The third catalyst is the macroeconomic tide that is turning, whether the traditional financial world is ready for it or not. We are at the end of a historic tightening cycle by central banks. The era of rapid interest rate hikes is over, and the conversation is shifting towards when the cutting will begin. The moment the first major central bank signals a pivot towards quantitative easing or rate cuts, the floodgates for liquid capital will reopen. After being starved of cheap money, the global financial system will be desperate for high growth, non-correlated assets. The trillions of dollars sitting on the sidelines in money market funds will begin their search for yield, and they will quickly discover a market with a total capitalization smaller than many single tech companies, yet with a global reach, perfect scarcity, and performance history that dwarfs every other asset class. Bitcoin is the ultimate high beta asset in a loose monetary environment. It acts as a leverage play on global liquidity. When the liquidity spigots are turned back on, a massive wave of capital will flow into this tiny, illiquid market, and the price impact will be astronomical. The final catalyst is a continued, stealthy institutional adoption that has never actually stopped. While the price has been stagnant, the foundational infrastructure for institutional ownership has been growing exponentially. Major asset managers are quietly building their digital asset divisions. Custody solutions are becoming more robust and insured, and regulatory frameworks, however slowly, are becoming clearer. This is a silent army preparing for deployment. They are not buying based on daily charts. They are building the plumbing for generational allocations. The first sign of sustained upward momentum will trigger a FOMO not from retail investors, but from these multi-trillion-dollar institutions who cannot afford to miss the next leg of technological transformation. Their entry will not be a trickle. It will be a deluge into a market with no sellers left, creating a vertical price discovery event that will be breathtaking to witness. These four catalysts, the final capitulation, the halving supply shock, the macro liquidity pivot, and the institutional FOMO, are not separate threads. They are braiding together into a single, unbreakable rope. The sequence is set. The data is clear. We are in the final moments of the accumulation phase, a period that will be looked back upon with a mixture of awe and regret by those who were present but chose to listen to the narrative of fear instead of the truth of the data. The story of the next great bull market is not being written on the news tickers. It is being written in immutable transactions on the Bitcoin blockchain, in the relentless movement of coins from the weak to the strong, from the temporary to the permanent. You have now seen the evidence. You understand the forces at play. The question is no longer what is going to happen, but when. And the final, most important data point suggests that when is now. This is the single most important moment to be educated, to be vigilant, and to be positioned accordingly. The information you just received is more valuable than any stock tip or trading signal, because it is the foundational truth of the market itself. If this deep dive has reshaped your entire perspective, if it has given you the conviction to see through the fear and recognize the opportunity of a lifetime, then you have a responsibility to yourself. Do not let this insight fade. Take action. Go to the comments section right now and type on-chain to let me and this community know that you are part of the data-driven minority that sees the real game being played. And then, you must subscribe and ring that notification bell, because this journey is just beginning. I will be here, breaking down every twist and turn in the on-chain data, providing you with the clarity and confidence to navigate the incredible transformation ahead. The storm is coming, but for those with the right map, it's not a threat. It's the vehicle that will carry us to a new financial future. The choice is yours. See you in the comments.